Hi everybody, HFR President Ken Heinz here with the HFR 400 US February 2023 Performance Snapshot. This is the first YouTube performance snapshot that we're doing for the newly launched HFRI 400 US indices. Very excited about this as an index of onshore hedge funds, which is ideal for retail and high net worth and ultra high net worth investors. February was an interesting month in hedge fund performance for sure, because we saw a return to a lot of the broader financial market trends that dominated 2022, but we saw some of the outperformance trends, the hedge fund outperformance trends from 2022 develop in the same way, but we also saw a new trend being strong outperformance in not only macro but also event-driven strategies for the month, and we're going to talk a little bit more about that as we go through the slides. As you can see here, the HFRI 400 strongly outperformed the decline of equity markets for the month. We show here a decline of just about 1/3%, a very narrow decline given that equities declined 4.2% for the month. Bonds also declined, as you know. And these two areas of leading performance were event-driven, which gained 64 basis points for the month, and we also had a gain of 56 basis points for the HFRI 400 macro index. This is very exciting because event-driven categorically has strong beta to equity markets. So when we see a gain, not only in February, but when we talk about the year-to-date results, it's also posted a strong gain. This is very encouraging, and this is very different than 2022, where event-driven was correlated with equity market declines. We're seeing a very different story in early 2023. Macro, as you know, was inversely correlated with equity market declines in 2022. And so what we're seeing there with gains across the macro strategies, including CTA and commodity, multi-strategy, is consistent with what we have been seeing last year as well. The most interest rate sensitive area of the hedge fund industry, relative value arbitrage, you can see that these had posted a very narrow decline, only 21 basis points in the month of February, and that's obviously a month when interest rates increased significantly. And then finally, decline of about 1.3% for equity hedges. You know, this is the area with the highest degree of beta or correlation to equity markets. You can see the decline there still pretty narrow given the magnitude of the overall decline in equity markets. Drilling down one level deeper to the sub-strategy drivers of performance in February of 2023, we can see the leading area of HFRI 400 performance is the quantitative directional index, the HFRI 400 quantitative directional. These are strategies that use quantitative processes, so not fundamental in nature, but these can be significantly long or short depending on what their models show. And you can see here gain of 2.15% versus a decline of 4.2% for the month. So very exciting performance there. Two macro sub-strategies next, both currency and commodity, gained 1.9 and 1 2/3%. These are strategies that can be both fundamental and quantitative in nature, but they're primarily focused on currency or primarily focused on commodity. These were strong areas of performance also in 2022, so continuing to see that into 2023, very encouraging. Special situations, we talked a little bit about that. We're talking a little bit more about it because it has been a very strong area of performance, 1 and 1.65% for the month. But what's particularly encouraging about that is special situations is an area where categorically has pretty high beta to equity and credit markets. And so you can see in a month where equities declined, credit widened out, interest rate rose. To see a decline in that is really an exciting thing for investors and indicative of what's going on in the event-driven space, which we're going to look at when we look at the year-to-date slide. Finally, the CTAs, the trend-following quantitative systematic directional CTA strategies, a strong performer in 2022 when equity markets declined, also gained in February of 2023, 1.1%. I know it's only been 2 months, so it's a little hard to look at the year-to-date for 2023, but I think we do see some interesting results here because you've seen significantly different markets in January and February. January was dominated by risk-on sentiment. February dominated by risk-off sentiment. So looking at the hedge fund performance through both of those market cycles, we see some interesting trends. The HFRI 400 event-driven, 3.33% gain versus a decline of 1.5%. This is a very exciting trend for all investors, particularly event-driven investors, because last year in 2022, when equities declined, event-driven declined also. Not as much beta as equity hedge has, but also a significant amount of beta. So when you're seeing that inversely correlated gains, that's very exciting. Similarly, what we see in an equity hedge gain of 2.5%. Obviously, that's a reflection of the very strong January, because we know from the earlier slide, equity hedge actually declined in February, but the net of those two is still a strong gain, much stronger than the year-to-date decline of equities. Overall, HFRI 400 gained 2% for the year thus far, only 2 months in. Very strong with the drivers. You can see here every strategy area is actually positive. And then we look at the most interest rate sensitive area of the market, relative value, up 135 here. And then finally, a gain of about 0.7% for macro overall. So all the strategy areas positive thus far for the year. Very exciting trend for investors. Finally, drilling down to the sub-strategy drivers of performance in the first 2 months of 2023, we see some, again, really continuation of a lot of the same exciting trends. 8.5% gain for the HFRI 400 event-driven multi-strategy. As you know, those are funds that have portfolios that go across different sub-strategies, special situations, merger, arbitrage, distress, activist, all of those types of strategies rolled into a single fund. That's why it's event-driven multi-strategy. Again, gain of 8.5%. As I said earlier, what's really exciting about this is that event-driven categorically has beta to equity markets. Here we're looking at a gain of 8.5% versus a decline of, for equities, of 1.5%. You're looking at 10% outperformance in 2 months for the event-driven strategy. So there's really some exciting stuff going on there. Similarly, we talked about quantitative directional. Those have been a strong area of performance with a gain of better than 6% thus far in the first 2 months of the year. Nearly 5% gain for the HFRI 400 activist index. We talked about how some of these activist campaigns are getting involved with technology companies. That's a trend that we absolutely expect to continue in 2023. So thus far, a gain of nearly 5% for the activist strategy so far, and 4.7% gain in special situations. Again, a lot of the same things are true about activist, special situation, multi-strategy. So 4.7% gain there. Again, very exciting because those strategy areas categorically have beta to equity markets. And then finally, the event-driven ex-merger arb, really taking out those strategies that are the event-driven strategies that are narrowly focused only on announced transactions and focusing on future transactions, other restructurings or corporate actions, things like this. Those gain 4.63% thus far in the first 2 months of 2023. So a lot of exciting stuff with the outperformance really concentrated in event-driven and macro strategies thus far for the year. As you know, there's a lot of great information on our website about the Investable HFRI 400. We're very excited about this launch, and we're going to continue doing these monthly videos as we do. If you're watching this video, you know we do regular performance updates on YouTube. Please subscribe to the channel, and please feel free to direct any questions that you have to us. If you'd like to set up a call, you can email me directly, Ken Heinz. Another, you're in contact with HFR, or you can just email indices at HFR. We can get back to you on that. Obviously, you know the website, www.hfr.com. Please go there. There's great information on the methodology, historical performance, and other information about the HFR 400. And finally, the investor guidebook. This is a very important thing. Please visit the website and download this. This talks a lot about the methodology for the HFRI 400 and how the HFRI 400 is really a solution to common benchmarking challenges that institutions face when they're benchmarking hedge fund performance. So I encourage you to look at the investor guidebook, download it, and please, if you have any questions, feel free to reach out to me or anyone at HFR. Happy to speak with you about this. Thanks, and look forward to speaking with you next month.